All right, so let's talk about finance charges and what QuickBooks does to help us assess finance charges. So first of all, there are preferences in your preferences area. So edit preferences. We go to finance charge and there are company-wide preferences, so global. So first of all, the annual interest rate. Okay, so this is annualized. Again, it's not, if you charge 1% per month, you multiply that by 12, right, to get that annualized charge. So I have in here 12% for now. Minimum finance charge. So if the customer owes you a certain amount, you want, let's not assess a finance charge if it's below $20 or maybe below $15 or whatever it is. Okay, so QuickBooks knows not to. You do have the ability to give them a grace period if you want to, so allow them some wiggle room. Basically, we'll switch that to 15 days. And then when we charge a finance charge, which account do we want it to post to? Generally, it's an other income account, right? Because this is not part of your normal practice in business. This is just you trying to get your customers to pay you faster. But yeah, generally it's an other income type of account. Okay, so below your bottom line there, because it's income for the company, but it's, again, not, you're not in the business to charge finance charges, right? It's just an extra piece there. Okay, so assess finance charges on overdue finance charges. So if you want to include the overdue finance charges in the assessment, you can keep that checked off. I'm going to say no for now. And then when do you calculate the charges from? Based on the due date or based on the original invoice date? Okay. So it's also a decision there. Most likely in your contracts or something like that, you probably have all this language spelled out somewhere in there. And if you don't, you may want to take a look at that. And then when we assess finance charge invoices, do we want them to be checked to be printed? Yes or no? Okay. So now that we have the settings in there, and of course you can go change those as needed, we can go in and assess our finance charges. So basically you choose your assessment date. And again, this date drives, so watch what happens. So if I change the date, it's going to change the finance charge amount, right? Because it's based on like a per day calculation. So if I go up one more day, right, it's going to change that finance charge amount. Okay, then we choose which template we want to use. So you can have your own invoice template for finance charges. Perhaps that looks different than your regular invoice. Maybe include some legal language on the bottom. So make sure that your template is set up appropriately. Then we choose which, right, it's showing us everybody who has an overdue balance, who we can assess finance charges to. It would also show us the last time we assessed a finance charge to them in here. Okay, then we can mark all, unmark all, mark invoices to be printed. Again, that's checked off as a default, but you can uncheck it from here as well. You can get to your settings, and then you can get to the collection history for this particular customer. So then once we decide, okay, everybody's going to get a finance charge, we go ahead and assess the charges. Okay, now when we come into the customer, there should be a finance charge. I'm looking at this fiscal year. Remember, in our other videos we talk about that. If you don't see it there, probably your date is incorrect. So because I dated it January 1st, see the invoice number, it picks up its own invoice numbering scheme, FC6, and I can open it up. I see the item is a finance charge item, the rate's 12%, the amount is $16.77 that we send out, and then it has a note in there why they're getting charged this finance charge. Okay, so very helpful. I don't see finance charges as much nowadays, I guess, on, unless it's automated from your bank or something like that, then, they have late fees and things like that. You don't see finance charges as much. If you are having to assess finance charges frequently, possibly it's a good way to consider how we can get payments easier, right? Because sometimes the more difficult we make it for customers to pay us, like let's say we only allow payment by wire transfer. I mean, customers to send a wire transfer have to go to their bank, and there's a fee and all this stuff, right? So maybe we need to consider ways to collect money easier. And QuickBooks does have a lot of ways that you can collect money easier, right? You can store credit card information on file for this customer, so maybe it's time to assess the credit limit on this customer or how this customer has to pay you. So maybe they only can pay you by credit card going forward. Also allowing for online payments where the customer can pay you online via ACH, right? Which is just kind of similar to a wire transfer, but they use their banking information in there. They can pay you online by that. Pay you online by credit card. The easier you make it for them to get you money, the faster that they're going to pay you. Okay, so give us a call if you want to talk about any of those options, or there's tons of other options out there. There's a lot of options, but you want to make it as easy as possible for them to get that money into your hands. Okay, that is finance charges.